Okay, but so that we've got a better sense of who everybody is, want to just ask you all just to take a minute to tell us a bit about yourselves and your companies. And we will start, I guess, if we start at the other end there. So Jean-Charles, if you want to kick off, CEO and co-founder of Alan.
Hi, everybody. So I'm the CEO and co-founder of Alan. Alan is a company we created 4 years ago with that mission to transform healthcare, to make it frictionless, fair and friendly for everyone. And we started by creating a health insurance company in France. We are the only health insurance that got a license since 1986. So in the last 33, 34 years, we cover today 70,000 members in France, and we are launching in Spain and Belgium right now.
Okay, Shachar.
Hi, Shachar Bialick, founder and CEO of Curve. The problem Curve is trying to solve is that the world of banking is very fragmented. We have multiple banks and apps, and it's just accelerating, especially with the adoption of fintechs globally. And we believe the inevitable outcome of what's happening right now is similar to what we saw in other markets, and banking as a whole will move to the cloud. The unique proposition of Curve is that the problem of banking is not that the bank is not doing a good job. There's a whole lot of other problems, but our banks are basically doing a good job. And therefore, we're not building a new bank, we're building an over-the-top banking platform. We started by creating the first all your cards in one. We moved into creating innovative products like time travel, so you can move transaction back in time, removing any hidden fees in underlying cards without thinking about it, and slowly moving into other financial products and services.
Okay. Brandon?
Hi, I'm Brandon Krieg. I'm co-founder and CEO of Stash. You know, we look after the middle class of America, and it's the biggest population of the US, and it's a massive population that is incredibly underserved and overfeed by the incumbent banks. And so we launched about 4 years ago now to offer investing, saving, and banking wrapped around financial education and advice. And the business is going well. We have over 4 million customers now. We're based in New York, and we actually this week are opening an office in London to continue our development. And you know, even with 4 million customers, we haven't even cracked the surface of the problems that consumers face now with money. And so we're excited.
Hi, everybody, and thank you for having me here. Well, Fintonic is a banking platform that addresses the financial needs of our users. We help them to better manage their money and organize them for them. We give them a let because they have all the banks and credit cards just in one place. So we tell them everything about what's going on with the money, which fees they are paying. But from minute one, every user has their own credit score because we have our own proprietary credit risk scoring. So they understand how good or bad they are for the banks. They can better negotiate, and they can get a loan through our marketplace, lending marketplace. Last year, we provide over 100 million loans granted through this marketplace. We have our own vehicle, but also 15 other huge banks in Spain are connected to this marketplace. And also we address different needs, such as insurance needs. We are brokers, and we have also an insurance marketplace, and we help people to switch among their telco bills and also energy bills. So we help them within all their financial needs. Thank you.
Alex.
Hi, I'm Alex, co-founder and CEO of Qonto. At Qonto, we started Qonto 3 years ago because we had suffered ourselves the huge pain of business banking. And so we are addressing that big pain, and now we are serving 65,000 clients, 65,000 SMEs across Europe. We launched in France 3 years ago and expanded into Germany, Italy, and Spain a couple of months ago. And we just announced a new round of funding a couple of days ago to become a fully licensed bank by the end of the year. So until now, we're still a payment institution, and we'll be offering credit at the end of the year or probably next year to serve even better our clients.
And Alex, you mentioned your fundraising. So what is that? I'm going to ask everybody else as well, so I'm not picking on you. But what have you raised now in total?
We've raised 136 million euros.
Okay, and profitable? still growing kind of stage?
That's why we're raising.
Okay.
We're not yet profitable.
And Lupina, you've raised?
I've raised 44 million, and we are going to be profitable this year.
Brandon?
We've raised 180 million, and we're on our way to the journey of profitability.
Shachar?
We raised over $80 million to date. We have time to get profitability, probably 2 years.
Okay.
And we raised 75 million euros, not profitable yet, but good unit economics.
Okay, so you're all kind of in different verticals. We've got health insurance. We've got from Brendan, we've got investment and kind of banking services. We've got SME banking. We've got banking kind of marketplace and credit scoring, and then we've got a kind of I think you describe it as like a new category you're creating, but a kind of like also you're getting into payments now, I think, as well, and kind of foreign exchange kind of stuff for sending payments for users as well. So you're all kind of doing different things in different areas. I'm just wondering, what it is that's unique about what you do. I mean, we can start with you, Alex, since you're this end. In terms of SME banking, there are obviously many other places that SMEs can borrow money, but you obviously identified something that's not working in the system. What's unique about what Qonto does in this space?
Yeah, just to, it's not about borrowing money right now because we're not lending yet, but it's more, your everyday finances. You have to pay your suppliers, pay your employees, do some, corporate expenses, and then you have to do your bookkeeping or accounting, and the whole process is a nightmare with traditional banks for three main reasons. The product is broken, the customer support is broken, and the pricing is not very transparent, to say the least. And that's exactly the three things we're fixing. We're just making an amazing product, amazing customer support that replies within 15 minutes, 7 days a week, and clear and transparent pricing with 3 plans, 9, 29, 99 euros a month. If you're happy, you stay. If you're not happy, unfortunately, you can leave. But there is no kind of trap, which again is quite different from what traditional banks offer. And
Lupina, I know that you talked about credit scoring. I was quite shocked to hear that Spain, until you came along, and there was no kind of credit scoring mechanism in Spain. Of course, you're also in Mexico and Chile as well. So what's unique about what...
well, bear in mind that FICO is in the United States or Experian in England. It's not normal, no? We don't have it in Spain. There's not a positive bureau, also in most of Latin countries. And if you don't have this bureau, this score, you don't know how good, you don't know which API do you deserve. And even more, you cannot get a loan if you are not a client for that bank for almost 12 months because they need your info. So from Fintonic, you know your credit score, but also you can get a loan within another bank that is not your bank from Fintonic vehicle or for other banks like BBVA, Santander, all the banks. So that's really, really unique. We've been positioned as a trusted advisor. The users see us like really an ally, because we never push them from our own product, but what is best suited for them. So that is also very unique because, as you know, each bank, and it's normal, will push from their own product, but from our point of view, it's more wise for a user to get what is best for them from a marketplace. So within Fintonic, in less than 2 minutes, everything digital, they can get a loan, and it's going to be in their account.
But I'm curious, why would if a bank doesn't generally get in Spain, at least, give loans to people that aren't their clients, why are they happy to give loans to people that aren't their clients through your platform? Wouldn't it make sense for them to...
Because they rely on our Know Your Customer. We do the Know Your Customer for them. So the user, when it's through Fintonic, they don't know with whom they're going to sign the contract until it's the last moment that we tell them you're going to sign with, like you deserve a 4% API, with BBVA, maybe I am worse and I deserve a 15%. We have flexible pricing, and until we have, in these 2 minutes, we need to do the credit scoring and everything, we will really tell the user which their API and which bank are going to get the loan.
And Brandon,
they get it through Fintonic, straight through Fintonic.
And Brandon, of course, in the US, I mean, very competitive market. What is it what kind of unique elements are you bringing to the table that people can't find, whether it's on the investment side, the likes of Charles Schwab or Robinhood, or on the banking side through all sorts of other online banks that are operating there? Yeah,
in the US it's competitive, and I think that's going to continue globally now. And I think, when you think about fintech, it's becoming already incredibly commoditized, not only from what the big banks are offering, but from all the venture startups. It's there's green and red and blue and yellow debit cards. There are debit cards everywhere, and there's a lot of choices. And when we thought about how we're going to build Stash, it's really about building it to be the financial home for customers, for our customers, and not kicking them out to use other people's products, but engineering everything inside of one ecosystem. So you don't need to bank there and invest there. You could do it all in Stash. And what's really special about Stash is that we wrap everything that we do around advice and education. Because you can get a bank account anywhere now. You can save anywhere now. You can get insurance anywhere now. But what is missing is getting someone to actually hold your hand and walk you through the process and stay with you for literally the rest of your life. And to give you that advice, that really important stuff that you need around how can you get through the month, how to think about insurance, how to know about the fees that you're paying to everyone. And when you take all that really important information and you put it into their financial home, it becomes very powerful for them. So advice is powerful, and then when you start teaching people, because when you think about it, financial education is a global epidemic that we're facing now because people don't understand anything related to money right now, which is a big problem. So we take it, we think we have a responsibility to teach these really important concepts from basic things like budgeting to how to think about long-term investing. And so that's very special, and we're going to continue, doubling and tripling down on that.
And Shachar? I mean, ultimately, it's a card that people get, and they can use that and kind of, as their kind of super card, if you like. I think I kind of had something similar with Travelex a few years ago, where they closed it down. So this is essentially what Curve is doing?
Functionally, it's similar to what Travelex had. Proposition-wise, positioning, vision, very different. Everything we do is new. It's a double-edged sword. We're building an over-the-top platform, so it's the first all your cards in one that allows you to access any account you want. The other way it works is that when you want to save money on FX, you don't have to partner with a new or buy a new service or pre-buy currencies and keep currencies at the fintech you may or may not trust. We just eliminate all your fees altogether without anyone have to think about it. Keep paying with the cards you love and trust. No fee, no hidden fees anymore. It allows you to move transactions back in time. So if you made a transaction on the wrong account, you can go back in time and change it to a different account, even 2 weeks later. You can send money from any of your accounts to any of your account. So if you have a Venmo card and I have a Revolut account, I can send money from a Revolut account to a Venmo card. Doesn't matter which account you have. These are all unique outcomes of building a positioning and technology and a processing engine that is connected on top of everything else on the platform, on the financial stack. The double-edged sword is because it's a new category and people are thinking in boxes in their head. So what are we repositioning that to? People are not waking up in the morning and Googling, I want all your cards in one. Some are doing it now, but 4 years ago, 3 years ago, they don't. So that's where the innovation in positioning and messaging is coming strongly.
Because you also, of course, I mean, if you're doing something, you run up to some obstacles. I think you had some issues with American Express, like recently, right?
So twice. So we are getting all your cards. One of them was American Express. Now in Europe, American Express, you can hardly use it. In France, for example, Air France is the biggest issuer of American Express. Yet if you try to use, and I love this in Paris, American Express in a store, you have a big sign, no Amex, where another magical situation, magical outcome of the product with Curve is that we allow you to use Amex everywhere. Because we connected to Amex, again, the financial stack, and the Curve is the MasterCard card, so we're increasing acceptance. Unfortunately, I can't speak about what's happening behind the scenes. We hope to bring them back, but let's see.
Okay, and Jean-Charles?
I think for us, we were in an industry where there were no new players for quite a very long time, and no digital approach, no willingness to simplify things or to make things transparent. And health insurance is a market where you have brokers, comparators, insurance companies, and nobody is fully integrated. And we believe that controlling the full stack from distribution to carrying the risk would make a difference, and it's making it. So where we save a lot of pain for both the end user, So we reimburse quicker, they know what they pay, they know how much they're going to get reimbursed before going to the doctors, these kind of things. Amazing customer service. But it's also, in France, it's mandatory for companies to provide health insurance to their employees. And managing that benefit was kind of a pain. And we make that also super transparent, easy to access. If you have a lot of employees coming in, coming out, we manage that very easily. And I think we are also trying to create a new category, which is more than a health insurance, which is to be really the partner in health for our users and our members. And we are adding new services over time that help people navigate the healthcare system, access to care, have access to proactive care at the right time. We tend to think that what is going to make even more the difference over time.
And I'm just curious to know, I mean, as you've kind of outlined, you're all doing kind of different things. In some respects, it's kind of new technologies, and others, it's kind of new ways of approaching things, new business models. So what is, for you guys, the kind of most important edge, the most important factor that gives you an edge over either competitors or would-be competitors in your market? Jean-Charles, I mean, you were talking about obviously regulations. I mean, if no one's, what was it, since 1986, you were the first one? So, you know, maybe that's something that puts people off from getting into that market. I mean, is it the regulation and your mastery of regulation, having people on board who can help you navigate that really makes it really hard for someone else to come in and emulate what you're doing, for example?
I think it's a combination of both. It's being able to really understand very well regulation while being a product and technology company in an industry where there is no product people. And that's, I think the differentiation comes from how deep we go in trying to delight our members like in every step of the journey. And I don't think it's a mindset that was really in our industry, which was more, oh, I'm going to make you jump through holes until you don't want to be reimbursed anymore. And so we try to totally switch the mindset to attract the kind of people that were not working on those topics in the past, so software engineers from the best companies in the world. And then it's the mastery of how you integrate something that looks very complex, which is regulation, distribution, etc., into the product and make it very simple for the end user. And I think great product and great engineering is to go very, very deep in the problems in order to simplify them for the end user. And we spend a lot of time and resources on that, which means building like a technological stack that is pretty hard to build. We spent the last 12 months to rebuild completely the claim management system, and now we reimbursed like really significantly quicker than the competition. It's more accurate. You can group different documents together, and that makes a huge difference. And it takes a lot of engineering time.
Right. And Shachar, I mean, would you say it's more like the technological side of things? I mean, you know, if you like, oh, let's have a supercard. Okay. I mean,
yeah. So it is very, very challenging to build Curve, or was very challenging to build Curve because we had to change rules and regulations multiple times. But now that we have changed it, others can join. If it's a new startup, it's hard to build a great company, fair game. They can bring a great team, the financial stack to connect or to have processors and new technologies. It's fairly commoditized, as Brendan mentioned. But it's hard to build a great company. But this is not where we concern are. The concern of most of us here in fintech is what will happen with the incumbents and the big techs. And there, what's unique in our product is that for an incumbent to do what we do, they have to convince the CFO and the CEO to let go of many of their existing revenue channels. So think of a CEO sitting at BNP Paribas, and you know, a cheeky guy like me comes to him and says, listen, you have to build this product that eliminates all your FX. The CEO looks at his P&L, says, what, my FX is about 30% of my revenue for consumer banking. He says, yeah, but if you won't do it now, in 10 years, you would lose the market. Real story on Barclays and TransferWise. And they will think only in the next 2 or 3 years because that's how they're being incentivized. In addition, our unique product, in order to be successful, it has to work with the entire ecosystem. It's an aggregator and connector of everything money. So I can't see BNP Paribas going to Societe Generale or Arkea or Barclays and tell them, hey, mate, let's collaborate. the reason is antitrust, but the second reason is ego, and the third reason is they're competitors on more or less the same markets.
So maybe it's tough for incumbents to kind of change that mindset to kind of come to terms with what's happening. But for someone like a very well-funded fintech, maybe a Revolut or an N26 or someone in that, or another neobank, I'm assuming that they've got the developers and they've got the know-how and the contacts already, the relationships.
And they built an amazing execution machine, and kudos to them. But you need to understand something, that the entire company's DNA is structured on one or few key elements. Yes, possibility of pivoting exists. Likelihood is less so, because that means that, the example you chose, Revolut, they would have to change their entire processing engine, licensing, regulations, the way fees works, business models, financial stacks, in order to just get on par with us. Why would they even do that if their strategy seems to work? So it's, at least in the short term or the near term. So it's unlikely to happen. It's not easy to pivot, especially when you're so big, especially when you have such acceleration toward the direction.
And Brandon, I mean, obviously you've got your own technology, but in terms of the business model, you said a focus on education, and you've got kind of like interesting ways of kind of rebranding, let's say, certain exchange-traded funds to kind of make them more appealing. I think there was one for defense companies, for example. You rebranded it like a Defending America ETF rather than a kind of, let's kill lots of people ETF kind of thing. So what I'm trying to get at really is how hard it is for someone else to kind of say, okay, yeah, that seems to work for Stash. Let's kind of introduce education programs, and we've already got the trading abilities. We've got the kind of asset management aspects as well that you already do. So how do you kind of maintain an edge in that respect in what is obviously a very competitive landscape?
Yeah, I mean, just before I answer that, it's interesting what you just said. Just made me think of what just happened in America with trading commissions, right? So Robinhood made a lot of noise with free trading, and then literally in the last couple of months, all trading in the US became free, which was incredibly painful for the firm. So I think it'll be really interesting when it comes to banking. At one point, does a CEO of a big incumbent bank go, you know what, this is gonna hurt really badly, but we're gonna make overdraft fees free? And I think that's coming really soon. I think that the big incumbent banks, at least in the US, are starting to feel the pain now, and they're gonna have to do things that are uncomfortable to last, to be around and relevant. And I think for Stash, it's a lot. I mean, we couldn't, I wish, I was working at a big bank and I was dealing with exactly what you said. I wanted to disrupt literally a huge revenue stream at the bank, and the CEO of the bank was like, I want you to do it. And then when I went and did it, I was completely shut down. I couldn't even release the software. But what I learned is that you have to really build new types of technology and listen to the customer. And I think our edge at Stash is literally we just listen to our customers, and we don't invent problems that don't exist. We try to really hone in on solving their pain. So like an example you just brought up, the reason we repackaged and relabeled ETFs is because if two friends are at a bar and they're sitting around and going, I'm so proud of myself, I started investing. I bought name this fund company, Core Tactical Class C shares. Literally, for most people, the conversation ends right there. So little things like that is to make investing relatable and understandable. We just relabeled it in a way where people could understand it. And instead of hiring Wall Street writers and educators to run our content, we hired a bunch of elementary school teachers who we got to leave teaching to come work at Stash to run the content team. So it's just about rethinking and repackaging all this stuff and doing it in a way where people can understand it.
But how does that give you an edge? What I'm saying is, like, someone else, whether it's a Robinhood or a Schwab or whoever, can quite happily and easily copy what they see as the best of what you're doing and then outcompete you.
Yeah, sure, and they all are, and it's really cool. I think it's a form of flattery, in my opinion. What the real edge we have is speed, and that we have literally built from scratch a full banking, investing, and advice platform. And so now it's about continuing to iterate on that. And one of the things that we do is we add delightful features on top of the existing platform. I'll give you an example. We built something recently called Stockback, so that because we have a bank and because we have an investing platform, anytime you go out now and spend money, like just now I went to Starbucks walking here, when I took my card out of the reader, I became a shareholder in Starbucks by spending at Starbucks.
How many shares did you get in shots? What fraction of a share did you get in Starbucks for buying your coffee?
I think I got like 0.0001 shares of stock.
So how many coffees would you have to buy to own 1 share of Starbucks?
But that doesn't matter. And that's what's so interesting. It's not the amount of money. For the bulk of the middle class, remember, 80% of people in America live paycheck to paycheck. And about 60% of people in America can't come up with $500 in an emergency. So it's not about the 1 share or the 2 shares. Even on Stash, we don't discuss in any way the number of shares you have. It's about the amount of money you have and the fact that you're a shareholder in this case, Starbucks, right? So getting 1 penny or 2 pennies of Starbucks stock is a big deal for most people. Because if you love Starbucks and you go to Starbucks all the time, and I happen to be a Starbucks addict, I get stock every time I go there. And not only has it made me a shareholder, but it made me appreciate the brand. I'm learning about the brand, and now I'm getting paid dividends every time they release dividends. So it starts a loop for me. Plus, to be honest, I'm not going to go anywhere else anymore because I'm a shareholder in Starbucks now. So it has meaning to me. So these are things that having a platform and 250 people that are building out this platform continuously gives us an edge that we can continue going really fast.
Lupina?
Well, from a point of view, to build a marketplace, always you have this chicken and egg problem. So it takes time to have the supply and the demand, but also that all the banks and insurance companies that have connect to the marketplace, they need to rely on you. And this takes time. Now we have built these trust blocks and we have made them to come to do all the audit. All these 15 entities, they're huge. They're most evolved retail banking in the world. As you know, it's the Spanish banks. We have BBVA, Santander, and they have audit for many, many months to become part of our marketplace. Also to make this credit scoring that it does not exist in Spain or these Latin countries. It takes time. You need data. We've been gathering data since 2012, so we have built all risk models. We have now the 4th model, and this also takes time. Of course, always can come someone in the future. It's not so easy to do it, but of course can come. What is in my mind, they always tell me, what happens if Google comes? Well, it would be better for the user. I will be very happy, you know, because of course—
Be happy if they're eating your lunch?
No, but I really believe that we are doing something that is going to change the mindset, and we are really, really helping people because we are really aligned. You cannot be the factory like banks are and sell your own product. That is not wise. I've been working also in banks for many years, and sometimes your oranges are the good for your clients, but many times they're not. They're better the ones that are in the other bank, you know, or it's the same with insurance, and it's the same with energy bill, or it's exactly the same. So I really believe in marketplaces, and I think that's going to happen. I really believe also in being profitable, and I think it's very important also, the unit economics. And to build this, it has taken a lot of time. It wasn't easy at the beginning because they didn't rely on our credit score, so we have to launch our own vehicle. We lent with our own money.
How much have you now lent with your own money?
Well, we've lent last year over 100 million loans were granted through our marketplace, and this year, this was the first year doing this because we have already all the blocks, so this year is going to be much more.
This was 100 million euros of your own, of your company?
No, it was among...
but how much of that was yours?
It was almost, I cannot relay that figure right now, but I will let you know.
I think what I wanted to understand really is I think out of all of...
It's 20% of our loans is given through our vehicle, because we only cover risks from 13% almost.
Okay.
We have a flexible pricing from 4% up to 30%. Our revenues grow last year 275% just in 1 year, and we will keep this the same.
And your bad loan ratio, how does that compare with the kind of existing banks?
Our expected loss is really, really, really low because we rely on our model, and of course, but also the banks have our score also, so they are relying and they're asking for more and more amount of money, of course, because it's going well. Because if they want to just go to the subprime, they will go. If they want to go to the near prime, they will go. We will just do the best for them. We want to have happy banks, but happy clients also.
And Alex, I mean, you talked about basically everything being broken when it comes to kind of SME banking. What is it that you've brought to the table that you know that is helping prevent others from kind of copying you and out-competing you? And I don't know, maybe the incumbents have noticed and they're starting to change things, which I guess is fine by you.
They are. We're happy. I mean, we're flattered, as you were saying, to be inspiring, let's say, traditional banks. But I think it's a combination of the three things I mentioned, like a great product, great service, and clear, and transparent prices. But I think if you step back, when we launched 3 years ago, the average NPS for traditional banks was around 0. It's probably a bit higher now, but not that much. And our NPS is above 70. So I think it shows quite clearly like how huge the gap is between what traditional banks were and are still offering to businesses, to small businesses, and what we are doing. And so if you have a player like us that's 70 NPS, you have much less room to improve or to do a better service. So that's one thing. And of course, so the number one edge we have is our current customer satisfaction. That's the first thing. The second thing is, of course, to keep that those clients super happy and to bring in many more. Speed is very important. In 2.5 years, we've already convinced the 65,000 clients. We've expanded to 3 new countries. We've raised 136 million, as I was mentioning earlier, and we're on our way to getting our full banking license. So it's quite a challenge. And so of course others could try, and maybe others will succeed, but it's getting more and more complicated to replicate what we've done, because speed, scale, and the excellence of the service we're providing is at least up to now quite unique. So I think it's quite tough for others to replicate exactly what we're doing.
And excuse me, obviously we've got different business models in different kind of sectors of the kind of fintech space, let's say. But I mean, you do insurance, so there's some insurance there. You're getting a full banking license, which I guess would allow you, if you wanted to do more kind of consumer banking, and obviously, Brandon, you're a bank there as well, and obviously the banks are issuing cards, and so did you see kind of scope for kind of moving more kind of laterally, and maybe you, from what you're hearing today, you think, wow, that sounds like a good idea, we'll do that in our space as well?
Do you think you should all merge, or?
Well, that would be great. Then we just have a very quick panel. But no, did you see things from other industries, if not on the stage today, that you feel would be, you see in, I don't know, consumer banking or in in insurtech space, people doing things that you think, that would be a good thing to kind of add, and that you're thinking of introducing in the near future?
Well, I think we're obviously always looking, what others are doing, just not for our job, but also because we're, in our private lives, we're consumers, we're, users of, different services. Just before, going on stage, I was chatting with Jean-Charles about the, the customer support and how to make customer support even more delightful and even more efficient. And so, of course, it's very interesting to see what others are doing in similar or very different industries. And by the way, there is no other, as I was saying, there is no other bank with a 70 NPS, especially for businesses. So of course we're looking at other industries. Of course, you have all the very well-known examples like Zappos and those kind of examples, but also like smaller companies that are doing a great job. And so it's very interesting, obviously, to see what others are doing.
And I suppose, Shaka, it seems like the one thing you all have in common is, it's very customer-centric. Like that's the only thing that really counts, is having happy customers, right?
Yes. So Curve has been focused so far. Next year or towards the end of this year, we'll start moving towards manufacturing. But we focused so far on the distribution side of finance, which is build the better experience, if you'd like, in a shorthand. And eventually, the manufacturing side, proprietary products from lending, etc., will come in. As our mission is to move banking to the cloud, basically we don't have a challenge of what opportunities for revenues. Everything in banking becomes an opportunity. Our challenge is choosing the right opportunity to invest in as the next revenue channel. We already announced late last year as we hired Paul Harold to lead our Curve credit business. Credit lending will be the next step of our evolution and the first step into manufacturing of financial products and services. There we will actually compete directly with different lenders and credit card providers. So for example, you will be able to, for every transaction you made in the past with Curve, swipe and split into installments. Doesn't matter who the merchant is, where in the world, or when you made it. So instead of paying £1,000 for an Apple Pay, for an Apple card, Apple phone, I could pay £1,000 using my credit card and then split it into 10 installments of £102 every month. Another experience, we would develop part of the same principle of revenue, lending and credit, because people add all their cards into Curve. We see exactly the APR on each card, whether they're paying the minimum amount or the full balance at the end of the month, what's the outstanding balance on each card, what's their affordability and cash flow over time, because they're spending all their money with us, where do they live, how much they pay rent versus mortgage, and we'll be able to see and recommend the user, hey, you spending or you paying a total of £1,000 a month on this and that credit cards, and the fees you're paying are an average of 30% APR. Would you like to refinance all of them for 15% APR? All you have to do, yes, Curve credit back all your credit cards, refinance the transaction.
And you take on the risk here, or you're doing the?
So we initially started by saying we will partner with credit providers who want to keep distribution and let those who knows manufacturing, credit lenders, etc., to do their. What we learned that if you want to control the experience, because we don't believe we can educate people, right? And it's a different way how Brendan thinks. If my parents couldn't educate me, if my MBA at INSEAD could not educate me in finance, no one can. Instead, we're going towards the direction of personal CFO. So my CFO tells me, he looks at the data, generates insights, and tell me, based on those insights, these are the two actions you can take, A or B. What do you want to do? I tell him, do A, after a few questions, and he goes, do that. This is the level of experience we're aiming with Curve. We're going to look at the data, we'll generate the insights for you, not educate you, and ask you what you want to do. If you want to refinance, we'll do it for you. And unfortunately, be able to do that fast enough across the regions in which we're operating, we have to do it ourselves.
And Brandon, do you get a sense that your customers want this kind of like not the responsibility, but at least the onus to be less on them and maybe on an AI or something else, kind of doing these things for them rather than having the education themselves? You kind of would take a different tack?
No, we already do that. I mean, we give actionable advice across investing. On investing, we'll tell you about diversification. You can pick a path. You could either learn about it and do it yourself, or you can click a button and we'll do it for you. On banking, we will give you advice around your spending, your income. We will give you actionable ways to get through the month, actionable ways to understand where your spending is. It's all in the product today. I think for us, when we think about the future, it's easy to get whiplash, right? It's really, really easy to build a lot of stuff, and it's really hard to keep it simple. This is the year that we're literally only focused on growth. We feel good about our product, and our customers feel good about our product because of our high NPS scores. And so there's a number of things we could do. We are dying to get into credit and lending, but we're going to hold off on that for a bit and just focus on growth and focus on the adoption of the banking product that we have, because it's really cool and it really helps people.
And you're holding off lending, is that because rates are so low, there's just very small margins in there right now?
No, it's just a focus thing. I mean, there are so many things that we can do to help our customers more. We have an ideas email channel that we give out to our customers to tell us what they want us to do. And literally we're getting 500 to 1,000 emails a day. And it's everything. It's lending, it's more insurance, it's leasing, it's renting, it's down payment protection. It doesn't stop. And it really comes down to how I believe the large institutions and how the financial system has failed the non-wealthy, right? Because if you're wealthy, there's tons of options. There's tons of people that want to help you, that want to give you advice, that want to sell you things. When you come down the stack to the 80% of America, there's not a lot of choices. And there's not a lot of places to go to get more and to get help with your money. And so unfortunately or fortunately, when you open up a product like Stash to the bulk of America and say, here, we're here to help you, everyone raises their hand and say, here's 1,000 ways you could help me. So we just have to stay focused on solving the biggest problems first and then coming down the stack.
And
to your point about whether there are revenues in lending or profitability, the answer is absolutely yes. It's probably the most profitable in the space. Just to understand the size of the problem in the markets. Over 70% of the European credit debt is in UK. If you look at the US, consumer lending is over $1 trillion in credit cards, and the rates has been skyrocketing from 10% to 70% in the past 7 years. Yeah. Car loans, 1.5 trillion. Student loans, I think it's over 2 trillion. You have over 5 trillion of consumer credit loans in the US. And what you want to ask yourself probably is what drove that both supply and demand in those markets, whether it's the credit bureaus that incentivize users to get more credit and identified things there. And this is really what concerns me on a macro level outside of my job and in my job of what will happen in the future with so much consumer lending out there, consumer loans out there.
And I guess sometimes it also depends on government regulations and what government wants. They're obviously very...
and the UK is amazing in that. The UK introduced the law. That's what's amazing about European regulations and law and legal. It's remarkable to see that UK introduced a law, I think a year ago, where if you have a persistent debt over, I think, 18 months, the lender must resolve it within 12 months. And if not, it's written off completely. They have no choice. Imagine that in the US. It's going to be a bad.
But yeah, what I was going to kind of add, obviously, the UK, whether it's UK regulator or other regulators, certainly in the wake of the financial crisis 10 years ago, very keen for fintechs to kind of come in and kind of help, perhaps, bring some innovation and help customers more so. Jean-Charles, I mean, health insurance, as you say, it's not everyone's favorite thing to deal with. Obviously, it's there, when people need it. So, did you find coming in front that were you kind of was the government very helpful, very welcoming, the regulator, or was it like a complete nightmare? But once you got it, then you're kind of safe behind on the other side of the wall, and now you can just focus on your business.
I think it's never black and white. We are in a market where we had 1,500 players 10 to 15 years ago. Now it's less than 500, so it's a consolidating market, and so the regulator was not like really pushing for new players. It's like more, if we can get less, it's better. And the regulation has been changing a lot with Solvency II for insurance entering into action a few years ago. So it was not like welcome and we want new players, but it was more like if you do what needs to be done, and it's hard, we won't block you in a dogmatic way. It's just, I think the regulators are there to protect the end user and to protect the system, and they made that job like quite very well. The only question is like, how do you understand the rule and the regulation? And the problem is the different layers, that the rules are written at the European level, but the regulator is at the local level, so they don't have control on all the rules as well. So I think it's just, as an entrepreneur and as a company, is how you make sure that you solve the fear and the problems of the regulator. And it's normal that they have fear, like you are a new player. Are you going to be there for the next 10 years to still reimburse your user? And if you're not, what you're going to do? And for us, it was really, I think in the past, tech companies were like, let's screw regulation, like we ask for forgiveness later. And I think we are in an industry where you cannot do that, and you should be more really aware of like your duty towards the market, towards the regulator. And we try to set that in our DNA from day one. And I think you should see regulation as a product. So it's not like something you give to your lawyers and like deal with it. It's something we see, it's part of our project on how we engineer regulation, how we produce our regulatory reports in a few seconds, how we have a team of 1 or 2 people when our competition have 100.
And I think you mentioned earlier moving into Spain, is that correct?
Yeah.
So do you then have to deal like all over again from the very start? Because it's not like you've got a banking license in a European Union country, you can operate across the EU.
You can use passport in insurance as well.
You can passport in health insurance as well. But I mean, in terms of the way customers are, or the health insurance system is in Spain. I mean, your ideal, I guess, is where it's really broken and no one's really brought any innovation for as long as possible, right? Is that why Spain maybe is a right market for you?
I think we are kind of lucky in a way that in almost every country in the world, the healthcare system are kind of pretty structured in a way that is not super user-centric. So we see opportunities in every country. No, it's how you tackle that opportunity. Really, for us, it's multi-local. So indeed, we can reuse our claim management system, our apps, our services, but we need to reconnect to the local system, build a new health insurance product for every country. So, but if we are the only platform or company that is able to be live in several countries, I think we are going to generate a value that is kind of unique. And then when you do that, you can also start to think about new health insurance projects or new just health projects and services that are more at a global scale, and it's part of our vision.
Lupina, perhaps you'll add Alan to your insurance platform?
Yes, of course. You have to come to talk with me.
And I guess for you as well, Lupina, we've talked here about being very customer focused. I mean, was it fortunate that you're Spanish, you're in Spain, that customers in Spain are particularly unhappy and there wasn't much innovation going on that was kind of solving their needs?
Yes, of course, we are really customer centric, and of course clients are unsatisfied because they are pushed to get the products. They have been charged, like last year we saved our users 14 million fees. So they trust on their banks, but they know it's not wise to always rely on what they tell them to buy or to get, or with solutions they do provide. So we have really, really engaged users, more than 900,000 active users that really come on a daily basis. So they're happy with us. But we also are regulated. We are the first fintech in Spain that have the payment initiation services and aggregation services. We are announcing that today we are team up with MasterCard also, but not for pushing our users just to get a MasterCard card, but if they need it, we will launch features that are leveraged on our strong capabilities. So if they need it, they will get it, but we'll never push for that because we need to rely and to remain independent. That's very important for us. And we've been doing this always centric user. For example, we helped our users and they can buy in Amazon at 0% APA and pay back in 4 installments. We were the first in the whole world that have signed this agreement with Amazon, and our users are really happy. So in the future, we will be signing this kind of agreement so our users can be happy and engaged with us, knowing that with Fintonic they can do like pay at 0% API everywhere.
So we just got 2 minutes left, guys. So I think just to kind of wrap things up, it's great to understand what or who do you fear the most when it comes to your companies? Maybe we'll start at the end there with Jean-Charles again.
I think like the main risk for us is more on, it's pretty classic for startup. It's like a strategic and execution risk. Is Brandon was speaking about focus, and I think focusing is really important when you're building a company. But it's, are you doing the right choice? Are you focusing on the right thing, which is a tough question. And then is how you execute, how you keep a pace and a level of speed that helps you be ahead of your competition. Then you can have new competitors arising, new regulation changing, incumbents reacting.
So lots of things keeping you up and out. So I'm going to rush on because we've only got a minute left. So Shachar, what or who keeps you up at night? Regarding your business rather than, family.
On the risk of being kitschy for a second is the unknown. Once you know the risk, you will know how to handle it. And within those unknowns is the execution risk. You grow in the team, you want to make sure communication operating systems are in place. You want to make sure you're getting things right, ideally the first time or quickly afterwards, so you can focus to the next milestone. So the unknowns and the execution itself.
Okay, Brandon.
Yeah, I mean, I feel like we have a pretty good grounding as to what we need to do. So it's what keeps me up at night is just speed, our speed of execution, just continuing to just have good output.
Lupina?
Fast execution always and have the great team because we want to remain lean and this is quite difficult.
Alex?
It's, of course, speed is important, but I think one challenge we have is also to scale. Like we have 200 people on the team today, and to be able to scale the team without, losing the agility and the kind of startup mentality that we have, and that's been, great for the past 3 years.
Okay, I was hoping you were going to say, like Tencent or Amazon or something or other, but I guess we'll see what fears they hold for you in future. But I want to thank you all for joining us on this fascinating discussion. So please join me in thanking once more Jean-Charles Samuelian, Shachar Bialick, Brandon Krieg, Lupina Iturriaga, and Alex Prot. Thank you.